Welcome back. Now, in year 2008, Ghana began a process of banking consolidation, and one of the contentious issues was the recapitalization of banks within Ghana. Joining us now to discuss the Ghanaian banking sector and financial services in general is Gabriel Edgal, who is the CEO of UBA Ghana. Gabriel, thank you very much for coming through. Now, in its diversification program, Ghana has focused a lot on financial services. I mean, you operate in that environment. Has the general diversity of the economy meant a very good performance for financial services?
Oh, yeah. Thank you. Good evening. The recapitalization, I think you said, has actually helped in the sense that it has created the capacity for banks to be able to take on large-scale transactions. For instance, UBA is participating very heavily in large-scale transactions, financing the oil and gas industry and other industries. So it's helped a lot. But again, you would find that the capitalization was done in stages. Foreign banks were supposed to capitalize by the end of 2009, and other local banks by the end of 2012. And so you'll find that there's some level of comparative advantage for the foreign banks now because they're all fully capitalized.
All right, just talking about that process of consolidation that began in 2008, foreign banks having to recapitalize at over $40 billion and or cedis, and different sort of rules applying for the Ghanaian banks with the Nigerian banks. It's raised questions as to whether or not there's a need to level the playing field and whether or not the rules of engagement have changed so dramatically in favor of Ghanaian banks.
Sorry, can you take that again?
I'm saying with the consolidation process, there is a fear or a concern that a lot more expectations were put on the foreign banks versus the Ghanaian banks, and that the rules of engagement have changed and changed not so much to the benefit of the Ghanaian sector. What's your opinion?
Yeah, I think, for instance, I think generally the capitalization has helped. What should have happened really is that all banks should be on level playing field, you know, where all banks are required to capitalize at the same time, so that you don't have a relative comparative advantage of one of the banks over the other banks. But what you would find is, again, there's a lot of syndications are coming up now, and so what happens is even the foreign banks call some of the local banks to participate in transactions with them. Okay, it hasn't necessarily increased lending, but it has positioned the industry to be able to participate in large-scale transactions, like I said before. And of course, what you would find is banks like UBA would definitely be in the forefront, having met all of the capital requirements, you know, and able to participate in joint transactions with some of the local banks and also with foreign banks.
All right, Gabriel.
But in terms of the landscape, yeah. Okay.
All right, we've also seen the Bank of Ghana change its prime rate by 100 basis points over the last few months, and that's raised questions because the lending rate still is above 33%, whereas the percentage changes were between 16 and 15 percentage points, and it's raising concerns about the propensity for default loans and just the general state of the credit market in Ghana. What are your views about the interventions by the Bank of Ghana and how it's facilitating the flow of credit or the flow of credit within the economy?
I think it's gradual. I think the idea, what has happened is the government does inflation targeting, okay? The central bank monitors inflation, and inflation had dropped drastically over the last couple of months. And in response to that, you know, the central bank, the Bank of Ghana, had reduced interest rates on treasury bills to a high of about 28%, from a high of about 28% to about 13% now, 12.5%, 13%. And so definitely you would expect that banks are supposed to follow by dropping their interest rates as well. Hitherto, what had happened is banks just invested surplus funds in treasury bills because treasury bills, you know, was 28%. Those returns were quite huge for investing in government risk. Now it's 13%. We expect that lending should be going more to the real sector, but it hasn't happened that fast. Because one, the balance sheets have to reprice. Okay, even though the prime lending rates have gone down on the Bank of Ghana's side, banks have to wait for their deposits to mature, expensive deposits, and then they will reprice, and then they can now start to lend, to companies, increase their lending. Now that treasury bill rates are no longer that competitive, definitely we would have to be looking at loans. But one of the major concerns, and that is also being handled by the Bank of Ghana, is being able to assess collateral for lending, to the real sector. But the Bank of Ghana has started a collateral management, collateral registration desk, and that's going to happen.
All right.
It's going to be fine. That way, you can now have development in loans to the real sector.
All right, we would love to speak to you a lot longer, but unfortunately time's not on our side. Gabriel Edgal, who is the CEO of UBA in Ghana. That's